Good morning. The last day of Trump's administration gives way today to an incoming president and staff whose policies will be dictated by a volatile global economy and very, very jittery markets. It's Wednesday, January 20th, and here's today's financial breakdown. U.S. markets closed nicely up yesterday, led by the Nasdaq 1.5%. The new administration promises a whole lot of changes, amongst them the appointment of an antitrust czar, according to Reuters, to deal especially with the war on big tech governance. Incoming Treasury head Janet Yellen was grilled by Congress yesterday for 3 hours. She promised to spend lots more and clamp down more on unfair Chinese trade practices. One Trump deal she would hack away at is the 2017 tax cuts bill. 2-year bond yields rose by nearly half a basis point and the 10-year by 2 as she spoke. Asian benchmarks were pleased by Yellen's promise of more U.S. spending. The Shenzhen Composite up 1.28% to record highs. The Nikkei lost 0.38% as the yen crept up another 0.13%. The Australian dollar jumped on news that China's central bank wouldn't be meddling in prime loan rates, keeping Chinese interest rates at 3.85 for the 9th month in a row. On the chart, we can see that bullish candle at midnight, despite yesterday's dismal drop in consumer sentiment, and then that march past the 77.22 resistance level. European indices were mainly pressured by COVID closures, Belgium's BEL 20 losing 0.85% and the FTSE 0.11%. The London Stock Exchange yesterday announced it would complete its acquisition of Refinitiv by month's end. That is the company half owned by Thomson Reuters, which provides most of the globe's financial markets data and infrastructures. Meanwhile, labour productivity in the UK increased by 4% in Q3 after a 1% contraction the year before, pushing the pound up by just under 0.25%. Consumer and producer inflation here added a fraction of a percent month-on-month in December, and we can see the pound-dollar pair already well above the day's pivot point, quite possibly indicating a continuation of yesterday's uptrend despite that overbought RSI. The euro earned a bit more on Germany's improving sentiment markets, the economic one gaining nearly 7 points in January, as producer inflation this morning adds 0.8% month-on-month in December. The Eurozone also marked a 4-point improvement. Oil data from the API and EIAs a day late this week. Meanwhile, futures are up 0.81% to 53.40 a barrel, as outgoing state sec Pompeo imposed more sanctions on Venezuelan oil transactions. As we can see, we're struggling with resistance here as the RSI turns negative and the MACD aims itself at the signal line. Pressuring prices down was the EIA's reported assessment that future optimism was overstated. Bitcoin lost a touch of glamour on Yellen's testimony yesterday. The incoming secretary said she was suspicious of cryptocurrencies in general, since so many of them were being used to finance terrorism. Gold seemed pleased on the rhetoric and added about 60 cents an ounce for the day, edging past resistance at 1844. 1861 is our next test. In corporate news, Alibaba shot up almost 10% yesterday after leader Jack Ma appeared in a live video conference with about 100 teachers in China. He'd been indisposed since October 24th, while Chinese officials continue dissecting his companies. FedEx continued down 1.20% after announcing it would cut about 6,000 jobs in Europe as it integrates its former competitor TNT. Trump's disappearance on YouTube and Facebook, on the other hand, will continue. And Disney was up 2.3% after hours on its announcement that execs would be getting smaller bonuses this past year. The company's fired over 50,000 employees over the past year, and Bob Iger will only be getting $21 million. That's less than half his bonus the year before. In earnings, Goldman Sachs announced more than doubling to $12 per share on $44.5 billion revenue for the year. They were urging caution for the year ahead. Shares nearly added 2% on the announcement, but lost 2.26 for the day. Bank of America lost 0.76% after reporting a 10% drop in revenues, but nearly a 1% increase in earnings per share. Halliburton was down 0.96 after announcing improved earnings, or rather less of a loss year on year, while the executives there expect an improvement in demand this year, and the profit beat pushed shares up in pre-market trading 1%. Only Netflix responded positively after hours with a 13% leap after announcing a 21% year-on-year increase in revenues based on a 22% increase in subscriptions. Notwithstanding, EPS dropped 8.5% to $1.19. Here, the major culprit is huge masses of borrowing to finance their extremely good production. That company said they would now be able to afford to stop loaning. Ahead today, Morgan Stanley, United Airlines, and Baker Hughes, with WH Smith and booze maker Remy Cointreau in Europe. That's it for today. Thank you for watching. We'll see you again tomorrow.